they found you amusing for a while, the people of this city. But the one thing they love more than a hero is to see a hero fail, fall, die trying. In spite of everything you've done for them, eventually they will hate you. Why bother?
What is going on, everybody? What is going on? I hope you guys are doing well. Okay, we're gonna get this whole thing started off here right now. So, okay, first things first, guys. Let's go over basically the entire charts here. So let's do this in depth here so we can check this out. Okay, let's go over first. We're going to go over Forex Factory here. Of course, the government shutdown is still continuing. Okay, we don't really have any word yet, but of course, now one thing we're going to go over today is going to be the FOMC statements. We're going to see what they said, what Jerome Powell actually even spoke about, because I think it's very important for us to have a little bit of a better idea of, okay, rate cuts now and then potential rate cuts in the future here. The Fed cuts rates again, but Powell raises doubts about easing next meeting, okay? So by a 10 to 12 vote, the central bank, lowered its benchmark overnight to 3.75 to 4%, okay? Kind of like the Fed that we were talking about, the expectations that we were talking about. I don't know if they did one hike or they did two hikes, actually. Yeah, so, okay. Wow. Wow, they did two, I'm pretty sure. It will be ending its reduction of asset purchasing, a process known as quantitative tightening, on December 1st. Holy God. What does that mean? They're gonna start printing money, guys. They're gonna start printing a shitload of money, guys. They're gonna start printing a lot of money. This is crazy. So, wow, this is actually, I'm making some notes here. This is some really good news here. Federal Reserve Wednesday. Okay, so they cut rates. Oh my God, yeah. Okay, so they cut rates to 3.75. Okay, so why is that important here? Because remember, the Fed has two ways to control monetary policy, okay? In order to control monetary policy, they control it in two ways. They control it either by A, cutting rates, or B, they control it by quantitative tightening, okay? Or quantitative easing, right? Or quantitative easing, right? And the great thing is, we've already had enough quantitative tightening going on, and they've been basically buying assets and kind of burning cash for us for a long time here. Now, the money supply with quantitative easing is gonna allow all markets to go up. So gold, crypto, everything might go up next year. Okay, this might actually be pretty insane if they decide. Now, what I do believe is gonna happen is, if we end up in a crisis where the market ends up potentially crashing because of the job market, we would cut rates immediately. That's like our secret weapon to boost the economy, right? Cutting rates. But you know what's actually even better than that is us still having the option to quantitative ease. We have the option in the back of our pocket. The Fed has this option to, okay, decide to print more money if we have market downturns here in the future. And that's very, very important. And the reason why is because of this here. I don't think we're gonna do it anytime soon because inflation's going back up, okay? But we do have probabilities here, okay, in the dot plot in the future. They usually update this every quarter. We're gonna be lowering rates here all the way up until 2026. Then 2027, we're probably gonna go to like, you know, either stay the same, a little bit lower, or start going back up higher again. You know? And that's when I see this whole thing like, you know, rising again here. So when this does happen, it's because we're going to start hiking rates again in 2027, 2028, because we're going to have another inflation problem. 100% going to have another inflation problem. Okay? Now, this is good news long term. In the short term, let's see what happens, because right now we went down, you know, here. So we cut 2 rates. So we're probably not going to cut rates in December, you know, probably aren't. Realistically, we're not. Okay. What I do see happening, wow, this is crazy news, man. This is supposed to boost markets. What I do see happening now is January, us staying the same, and then April will be the next rate cut. So what does that mean? This could be good and bad for markets. Because what is the... Remember, the markets are always buy the rumor, sell the news. We're always looking for something, right? So they can't dangle the carrot in front of our faces. They can't. Remember what the government does. What does the government do? They dangle the carrot. They dangle the fucking carrot in front of our faces. That's what they do. They dangle the carrot. Why? Because they say the rate cut's coming. The rate cut's coming. Now that it's been announced that the rate cut, we had actually 2 rate cuts today. 2, like, you know, we went down a whole 2. What I am seeing at 2 quarter points is we're not going to cut rates in January. We're not going to cut rates in March. We're probably going to maybe see a rate cut in April or June, most likely in June, July, the slow months of the market. What does that mean? There's going to be profit taking. There's going to be profit taking. I predicted this, and I believe November and December are going to be bearish. We're going to get some bearish months. Maybe not all of November, but December historically is a bearish month. We're going to get some bearish movement here soon. Okay? This is not good. I'm just going to be honest with you guys.
Power of the sun.
Okay. So let's go back now. So because of this prediction here and what I'm looking at, and the government shutdown also, we have no negative. We don't know the news. We don't know what's going on. When the government shutdown gets uplifted, what people don't understand is, yes, it'll hit markets go up, but markets are going to react negatively once they realize what the job report really looks like. Okay? That's not good. ISM manufacturing PMI, cash rate, RBDA cash rate, unemployment change cash rate. You have a bunch of stuff here. ISM, PSI, ADP non-farm employment change. Wow. Okay, so government data still will be updated by shutdown. Okay, so how far are we from a government shutdown being uplifted? Let's look at this here. I need to look at what's going on here. What key dates? I hate looking at CNN, but if they have key dates, then I want to know. Air traffic controllers missed their first full paycheck. Well, that's not good. Military paychecks. Wow. That's not good. There's no such thing as a free lunch. And there's no such thing as a free $130 million gift. Of course. Come on. Stop that. There's no such thing as a free lunch or a free gift. But it's possible to way more as Democrats fight this. Let's keep going here. Obamacare premium increases. Election day. don't think this will happen here. All right, let's mark up charts. Let's see what's going on here with charts, guys. Now it's time for chart markups. I looked at just some of the fundamentals here. I wanted to see what these what government was doing. Will you look at that, man? Will you look at that? We talked about Dixie, and you guys can go back and look at all the live streams, man. Like, this is 100%. Look at this accuracy here. We talked about Dixie coming here, and Dixie shooting up, and markets going down, right? So all our VIP students saw it. Okay, all our VIP students got it, right? We have a buy the rumor, sell the news. Today was the pullback to get back into the run to the upside here. Now, markets still might go down. We might have to see during New York here, but I did say that this thing was going to be a buy the rumor, sell the news, right? And that's exactly what ended up happening here. Okay, you know, again, we're very accurate, and a lot of this is fundamentally driven. Remember, the reason why now the market's pulling back here, or Dixie's going down, is because they just announced potential quantitative easing. Okay? Quantitative easing is going to be insane if they start doing a lot of quantitative easing. Now, I don't think they're going to, but the fact that we're no longer going to be doing any type of quantitative tightening or buying back assets here is very, very, very bullish. Now, no rate cuts until April of next year is bearish. Okay, that is not good, because we have nothing to look forward to. Remember that. You have nothing to look forward to. Okay. So what am I looking at here in terms of markets right now? Okay. I'm looking at a pullback. Some type of pullback here. But still, this thing is still technically bullish until we break this structural zone now. So I'm curious to see how the market reacts specifically here. I think markets are going to rally though for a bit. Markets are going to rally tomorrow. SPX had that pull down, come back up. Liquidity sweep, and notice this. This is how you know it's still bullish. We talk about it with our VIP students, right? Look, you see that? The pullback for what? Potential run to the upside because it didn't close below 4-hour structure. If it had closed below, I'd say, guys, we're gonna fill the gap and we're coming down here. Now, this might just be a small shift in momentum to come back down and then eventually go down here. I believe by probably November, we're going to be down here. To be honest, I don't see the markets being too bullish for too long. Reason being, again, we do not have any type of rate cuts coming. Okay? We don't. So what's there to look forward to? If there's no rate cuts, there's nothing to look forward to. Remember that, guys. Nothing to look forward to. Okay, 30 seconds, guys. Second, guys. I'm looking at SPX is something very similar here. I'm looking at potential tomorrow. As this thing starts to go down, this thing is going to continue to keep rallying here. Probably mitigate by tomorrow. And push to the upside, but this thing looks very bullish here. Russell looks like it's mitigated this zone here. And our buy is doing incredible, right? So this mitigation here looks like order flow to the downside, and we might actually have a breakout this time. Let's look at the 10-year yield here. We talked about this moving to the upside here. Why? Because it broke structure. Yields are going up, which means bonds are going down. Money's moving into the markets right now, guys. And I think this thing's about to turn around. The whole train is about to turn around for us. Okay. Gold, I've been waiting for gold to come a little bit higher here for some sells here. No action, really. No action. I looked this morning here at gold, saw that it was all the way up here, and I just didn't really do anything this morning, guys. I'm not gonna lie to you. I didn't sell it, I didn't buy it. Why? I saw the mitigation here, yes, but I just wasn't that confident in it. It showed signs of buying, like indecision here to the upside, and then it also showed indecisions of selling, and to be honest, it broke every rule here. So it didn't match any of my rules today, which is why, you know, the break of the Asian range is usually bullish, but there was no real 10 a.m. reversal. There was a lot of reasons why this morning I didn't trade gold, and it's a good reason. You know, it actually didn't. I believe that it was going to actually move more bullish today, but I just looked at it and it didn't follow my rules. And sometimes it's best when you are trading a pair. It's best to know when to walk away. I've only lost money when all 5 of my confirmations haven't lined up. If all 5 of my confirmations line up, I make money. But I've lost money when only 2 or 3 of those confirmations line up. Then I'm taking a risk. Have I made money? Yes, when only 2 or 3, but I'm taking a risk. This one here, all 5 didn't line up, so it didn't make any sense for me to even go into the trade. Right? It made no sense. So, yeah. This actually does look a bit bullish. Looks like it could be bullish here. Now, remember, we still have that break of structure here on the daily. Four-hour break of structure. We do have that mitigation here. This could very much actually turn around, but it's... I'm looking at sell positions potentially here. Tomorrow we'll see. I'm confident a sell position could come somewhere here by tomorrow. I'm looking for sells. To be honest, I'm just going to follow the trend here. Now, if markets start to move to the upside, if I do see a break here, doesn't matter, I'll get a pullback here. And we'll see a move to the upside. So no worries. I'm just curious to see how markets react here. I don't like this bearish movement here. And to be honest, the volume isn't looking good. The volume still looks like it has some room to come down.
great responsibility.
I'm always interested in gold futures and the way that gold futures looks. Sometimes it'll give you clues on where gold's heading to next. So it's always interesting to look at gold futures here. All right, guys, let's look at GU here. I called sells on GU. Wow, this thing really went down. Did it break structure? Did it break structure? No, it did not. GU is at historic lows, and it actually makes me want to buy GU. Yeah, that would be kind of stupid, I'm not gonna lie. The reason why is because I don't want to guess the bottom here. Guessing the bottom is like trying to catch a falling knife. You're gonna hurt yourself. I'm gonna look for sells on GU still. USD CAD, I don't really know what we're doing here. Again, sells with USD CAD, and that's Dixie here. So it actually looks like USD CAD is gonna drop tremendously, like not just a little bit, like a lot. We're at pretty high highs right here, but it looks like we're about to have a major break of structure here with USD CAD here, because we had a break of structure on the 4 hour, 8 hour, and holy shit, on the daily too, right? Did we? On the daily? I'm sorry guys if I'm swearing here. It looks like we are. Okay. That means USD CAD's gonna come down most likely to... I'm looking for a sell potentially here soon. Already hit this. The next target is here. There we go. Yeah, the 1.8 or 2.168. These areas here. You're looking for more sells on USD CAD. Dixie might go down. Wow. Let's look at Bitcoin. Let's look at our Bitcoin trade. While all of retail was losing millions, we were making money on Bitcoin sells. Bitcoin might not go down forever, guys, but this right here insinuates that we're going to get a pullback and a potential other sell-off here, guys. There's a big possibility for a sell-off. We still need a target. I believe 98 still needs to be targeted. But I do believe we're going to move to the upside here. And I do believe we're going to sell off again. Here. And here. If Bitcoin comes here, we're most likely going to sell off tomorrow. I think Bitcoin by tomorrow will be 108. If we break structure here, Bitcoin's going to do this. Come back down, test that zone, and then run and rally. Okay? So no worries. We're going to make a decision here to sell. And if it closes above, screw it. It is what it is. You know? But you want to follow trend. MSRT went down. Nvidia holding price, but it's going to go down. And Coinbase doing it's the same thing. All right, guys, we are going to trade live. This was a good session, good review, but I appreciate y'all. I love y'all, and I will talk to y'all soon. Have a good one. Peace.